Exchange-traded funds (ETFs) have revolutionized the investment landscape, offering investors diversified exposure to various asset classes. Among the myriad of ETFs, active ETFs have emerged as the focal point of growth in the industry. With a staggering 22.3% organic growth rate, active ETFs are poised to be the major drivers of expansion in the ETF sector. This surge in popularity can be attributed to the unique combination of the ETF wrapper and the active tilt. In this comprehensive exploration, we delve into the reasons behind the remarkable growth of active ETFs, their benefits, and the evolving landscape of Europe-domiciled active ETFs. The rise of active ETFs. The ETF industry has witnessed a transformative shift, with active ETFs taking center stage. Over the past 5 years, Europe-domiciled active ETFs have seen a remarkable surge in assets under management, AUM, skyrocketing from €8.7 billion to €34.9 billion. This meteoric rise underscores the growing preference for actively managed strategies within the ETF framework. Morningstar Direct data reveals that as of 2023, the organic growth rate for active ETFs stands at an impressive 22.3%. Understanding the active ETF advantage. The ETF wrapper, a game changer. One key factor driving the success of active ETFs is the ETF wrapper itself. ETFs offer a unique blend of flexibility, liquidity, and cost-effectiveness. The ability to trade throughout the day on the exchange, coupled with lower expense ratios compared to traditional mutual funds, has attracted a broad spectrum of investors. Active ETFs leverage these inherent advantages, providing a dynamic investment vehicle with the potential for alpha generation. The active tilt, navigating markets effectively. Unlike traditional passive ETFs that track an index, active ETFs are managed by portfolio managers who actively make investment decisions. This active tilt allows fund managers to navigate changing market conditions, seize opportunities, and mitigate risks. The active approach empowers managers to adjust portfolio allocations, respond to market events in real time, and capitalize on inefficiencies, all while maintaining the benefits of the ETF structure. Analyzing the European landscape. Growth trajectory, from €8.7 billion to €34.9 billion. The exponential growth of Europe-domiciled active ETFs is a testament to the evolving preferences of investors. Examining the journey from €8.7 billion to €34.9 billion in AUM over the past 5 years unveils a robust demand for actively managed strategies. Investors are increasingly recognizing the potential for outperformance and risk management offered by active management, and this trend is reshaping the investment landscape in Europe. Factors driving growth. Several factors contribute to the surging popularity of active ETFs in Europe. The ability of active managers to capitalize on market inefficiencies, react swiftly to economic developments, and adapt to changing conditions has resonated with investors seeking a more dynamic investment approach. Additionally, the transparent and low-cost nature of ETFs has made active strategies more accessible to a broader investor base. Challenges and considerations in active ETF investing, navigating the nuances. The substantial growth of active ETFs undoubtedly signals their increasing popularity, but investors must exercise prudence and consider the challenges and nuances associated with this dynamic investment vehicle. While active ETFs offer numerous advantages, it is crucial to recognize and navigate potential pitfalls to make informed investment decisions. Higher management fees, balancing costs and performance. One primary concern for investors considering active ETFs is the potential for higher management fees compared to their passive counterparts. Active management involves the expertise of fund managers who make strategic decisions to outperform the market. This expertise, however, often comes at a cost. Investors must carefully weigh the additional fees against the potential for enhanced returns. It becomes imperative to assess whether the skill and acumen of the fund manager justify the higher costs and if the overall value proposition aligns with the investor's financial objectives. Mitigation strategy. Investors can explore active ETFs with fee structures that align with their risk tolerance and return expectations. Additionally, thorough due diligence on the historical performance and track record of the fund manager can help investors gauge the potential for outperformance that justifies the associated costs. Risk of underperformance. Active management's double-edged sword. The active management approach, while designed to capitalize on market inefficiencies and generate alpha, carries an inherent risk of underperformance. Unlike passive ETFs that track predetermined indices, actively managed funds depend on the manager's ability to make astute investment decisions. Market dynamics, economic uncertainties, and unforeseen events can pose challenges for active managers, potentially leading to periods of underperformance. Mitigation strategy. Diversification remains a key strategy for managing the risk of underperformance. Investors can consider building a well-diversified portfolio that includes a mix of active and passive investments. Additionally, staying informed about the fund's investment strategy, understanding the manager's approach, and regularly assessing performance against benchmarks can help investors make informed decisions. Skilled portfolio management, navigating the complexity. Active ETFs require skilled portfolio management to navigate the complexities of the financial markets successfully. The ability to make timely and informed investment decisions, adapt to changing market conditions, and identify lucrative opportunities is a demanding task. Investors entrust fund managers with the responsibility of actively managing the portfolio to achieve the fund's objectives. Mitigation strategy. Prior to investing in an active ETF, investors should scrutinize the qualifications and experience of the fund manager. A track record of successful decision-making, a robust investment process, and a clear communication strategy are indicators of a skilled manager. Ongoing monitoring of the fund's performance and manager's actions ensures that the investor remains aligned with the fund's objectives. Market liquidity and trading considerations, a potential hurdle. Active ETFs, like their passive counterparts, are traded on exchanges throughout the day. However, the active management of the portfolio may involve more frequent buying and selling of securities. This heightened trading activity can impact market liquidity and potentially lead to higher trading costs, especially during periods of market stress. Mitigation strategy. Investors should assess the liquidity of the underlying assets in the active ETF and consider potential trading implications. Understanding the bid-ask spread, trading volumes, and the fund's tracking efficiency is crucial. Additionally, employing limit orders and strategic trading approaches can help mitigate the impact of heightened trading activity on overall portfolio performance. Regulatory considerations, adapting to evolving regulations. The regulatory environment surrounding ETFs, both active and passive, is subject to ongoing changes. Investors need to stay abreast of regulatory developments that may impact the structure and operation of active ETFs. Regulatory changes could influence transparency requirements, tax implications, and other aspects of active ETF investing. Mitigation strategy, regularly monitoring regulatory updates and staying informed about changes in the legal landscape is essential. Engaging with financial advisors or legal experts who specialize in ETFs can provide valuable insights into compliance and regulatory considerations. Adapting investment strategies in response to evolving regulations ensures that investors remain compliant and well-informed. The future of active ETFs. As the momentum behind active ETFs continues to build, investors and industry stakeholders eagerly anticipate the trajectory of this dynamic investment vehicle. What lies ahead for active ETFs? Will the growth momentum persist, or will challenges emerge that could impede their ascent? This section explores the potential future trends, regulatory considerations, and innovations that could shape the landscape of active ETFs in the years to come. Continued growth trajectory, expanding market presence. The robust growth witnessed by active ETFs in recent years suggests a continued upward trajectory. As investors increasingly seek the benefits of active management within the efficient ETF structure, the market share of active ETFs is likely to expand. This growth may be propelled by a growing awareness of the benefits offered by active ETFs, such as real-time trading, transparency, and potential alpha generation. The increasing array of strategies and asset classes covered by active ETFs could further attract a diverse range of investors. Evolution of investment strategies, specialized and thematic offerings. The future of active ETFs may see an evolution in investment strategies, with fund managers developing more specialized and thematic offerings. By targeting specific sectors, themes, or investment styles, active ETFs can cater to investors with distinct preferences and risk tolerances. This evolution may lead to a more customized and diversified set of active ETF options, allowing investors to fine-tune their portfolios according to specific market trends or thematic interests. Integration of ESG principles, sustainable investing takes center stage. Environmental, social, and governance (ESG) considerations are increasingly becoming integral to investment decisions. Active ETFs are well positioned to integrate ESG principles into their strategies, aligning with the growing demand for sustainable and socially responsible investing. The future may see an uptick in ESG-focused active ETFs, catering to investors who prioritize both financial returns and positive societal and environmental impacts. Regulatory considerations, adapting to a changing landscape. The regulatory environment plays a pivotal role in shaping the future of active ETFs. As the popularity of these investment vehicles grows, regulators may introduce new guidelines or amendments to existing regulations. This could encompass areas such as disclosure requirements, trading practices, and fund management standards. Investors and fund managers must stay vigilant to navigate the evolving regulatory landscape and ensure compliance with any changes that may impact the operation and structure of active ETFs. Technological innovations, enhancing efficiency and accessibility. Advancements in financial technology, fintech, are poised to reshape the landscape of active ETFs. Technological innovations may enhance the efficiency of fund management, streamline operational processes, and improve accessibility for investors. Blockchain technology, for instance, could be leveraged to enhance transparency and security in the creation and redemption process of ETF shares. Additionally, the use of artificial intelligence and machine learning may facilitate more sophisticated investment strategies within active ETFs. Global expansion and cross-border listings, accessing new markets. As the popularity of active ETFs transcends borders, fund managers may explore opportunities for global expansion and cross-border listings. This could open avenues for investors to access active ETFs that focus on specific geographic regions or global themes. However, navigating the regulatory frameworks of different jurisdictions will be essential for successful international expansion. Conclusion. In conclusion, the remarkable growth of active ETFs in Europe, exemplified by the staggering 22.3% organic growth rate, positions these investment vehicles as the major drivers of expansion in the ETF industry. The unique combination of the ETF wrapper and the active tilt has reshaped investor preferences, providing a dynamic and cost-effective alternative to traditional investment vehicles. As the landscape continues to evolve, active ETFs are set to play a pivotal role in shaping the future of investment strategies. Investors, fund managers, and industry stakeholders alike should closely monitor this trend, considering the potential benefits and challenges associated with active ETFs in the dynamic world of finance.